22, because section 22, basic charge of 22 is on the basis of notional income. Only when the real income is more, the real income comes into picture. So if you go to the scheme of 23.1, 23.1A says you have to pay tax on expected rent. 23.1B and 23.1C, 23.1B says if your actual rent is more, actual rent will become your annual value. 23.1C says if your actual rent is lower, and if it is lower on account of vacancy, then you can take 23.1C. If you're not covered by B or C, IHB is always on 23.1A only, which is always on a notional income. Real income comes into picture only when it is more or less on account of vacancy. So, I think the step is good. I think we have to appreciate they've taken a step of giving that concession, but they can be a little bit more liberal in that respect. So that's the only point. But anyway, I think the real estate company should also, they should put a constant pressure on the government to, if not at least 2 years, they should at least make it at 4 or 5 years is what they should try to claim, because that's already there in 24B and all. Because your pre-construction period, your construction period all is 5 years. That's what they should seek. So now the second issue is a very interesting one, which is a conversion of stock in trade into a capital asset, for which you have a new section, section 28(6)(a). This was a very interesting section. All of us are familiar with the reverse, 45(2), conversion of capital asset into stock in trade. That was always there in section 45(2) of the Income Tax Act, introduced by assessment in 85-86. So that was a very interesting decision by the Supreme Court in by stream by K. Kuka. So I was having I have 5 acres of land. The land appreciated dramatically. So if I'm going to sell the land, I have to suffer capital gains tax. The assessor in that particular case, so what he did was, he started a business of real estate, took this land as a part of his stock in trade. As my friend was talking about accounting aspects of it. Worldwide accounting allows you to take the fair market value on the date of conversion as your cost. So I purchased for 1 lakh, today it's 1 crore. So I started the business. I don't have to go to sub-register office, transfer at all. As a proprietor, I don't have to do it. So therefore, I credited in my books upon capital of 1 crore, land as a stock in trade of 1 crore. Immediately, I sold the land for the same 1 crore. I filed my tax return with a business income of 0. And I also did not offer any amount under capital gains. The Supreme Court said, fantastic. There is no business income because the cost is accepted by the department itself as 1 crore. But department wanted to tax the difference between that 1 crore and 1 lakh as a capital gains. So in order to come under capital gains, we all know that 3 conditions must be satisfied. There must be a transfer, the asset must be a capital asset, there must be a profit or gain. Definitely capital asset, yes. But is it a transfer? If it is a transfer, to whom I am transferring? To your business. If Sachin Tendulkar starts a business, Sachin Tendulkar alone is taxable, not his business. Take the charging section of section 4. Income tax shall be charged for every assessment and the total income of previous year of every person. This person is taxed. Person is defined by 231. Person includes individual. So if a business is not taxed at all, business is only a source of income. It's only the person is taxed. Therefore, Supreme Court took a stand. Where is the transfer here? You cannot come back and say there is a separate entity concept in accounting, business and individual different. All those things and all will not apply for tax. There is no transfer. So only thing is that nowadays, if a tribunal judgment also comes, they amend the law immediately. So it's the 1964 judgment amendment was made in 85-86 assessment year. They amended section 247, clause 4 was introduced. Conversion of capital asset into stock in trade is a transfer. And then you also have a separate charging section, 45 subsection 2. So 45 subsection 2 says when your capital asset is converted to stock in trade, fair market value on the date of conversion shall be deemed to be the full value of consideration accruing or arising as a result of transfer. But interestingly, capital gains shall be chargeable to tax in the year in which the stock in trade is transferred, sold or otherwise transferred. Though the transfer happens the year of conversion, capital gains is postponed to the year of sale of stock in trade. Logically, because that is when I get the realizable consideration. That means the second person to the transaction comes only after the sale of stock in trade. We all know the principle of mutuality. I cannot make a profit with myself. But the section was correctly worded. The capital gains gets postponed to the year of sale of stock in trade. But there was no provision for the reverse. If I am going to convert my capital as into stock in trade, yes. What will happen if I do the reverse? Stock in trade to capital asset. For example, take a very simple, forget real estate for a minute. It's more easier to do in the case of shares. So I have some listed shares. The shares are held for more than 1 year. For a moment, forget about 112A. Think about 1038. In 1038, if I sell the listed shares and if it is a long-term capital asset, the entire capital gains becomes exempt from tax provided STT is paid. Definitely, there are some smart investors who had a shares in the books of as a stock in trade, but which are held for more than 12 months, moved the same to investment. And then they subsequently sold. The resultant capital gains has been claimed as exempt under section 1038 of the Income Tax Act. Because if I'm going to sell as a stock in trade, I don't get 1038. I get the benefit of exemption 1038 only if I sell it as a capital asset. Therefore, you move your stock in trade into capital asset investment and then sell, claim the benefit of 1038. Two issues arises here. One, how to calculate the holding period. Some tribunals took a stand that the holding period should be taken right from the date on which you hold the asset, not necessarily from the date on which it became the capital asset. So because the section never talks about how you should hold. Plus they said that 1038 benefit is available. So this is a very easier case for you to understand. Shares it's very easier. The same logic is also applicable in the case of real estate also. Assuming you have as a stock in trade, if you want to move it as a capital asset, there is no problems at all. There is no issue. There is no provision in the Income Tax Act similar to that of what we have in 45(2). That is where this 28(6)(a) was brought into Income Tax Act. Now, in 28(6)(a), the fair market value of inventory as on the date on which is converted into or treated as a capital asset determined in the prescribed manner. So the fair market value has been determined under 11 UAB, and 11 UAB specifically with reference to the immovable property. Stamp duty on the date of conversion is going to be taken as your fair market value. So that means if you are going to move your stock in trade into an investment or a capital asset, then the fair market value or the stamp duty valuation on that date is going to be considered as your consideration for the purpose of computing business income. But what you must understand, unlike 45(2), here the business income is not going to be postponed till the date of sale of your investment or capital asset. There are some people say there is even I might have also put in the slide like this, but I think I won't say this is, both can be seen in the same direction, because stock in trade is something which you are supposed to liquidate immediately, right? But it's not the case of a capital asset. I think that is the one important difference you have to understand here. I won't say that entirely this section is at fault, but where we are trying to take a stand is because of the memorandum. Now, what is it memorandum saying? Now, sometimes the memorandum, they can avoid the memorandum itself. Now, section 45 of the Act inter alia provides that the capital gains arising from the conversion of capital stock in trade shall be chargeable tax. However, in cases where the stock in trade is converted into or treated as capital asset, the existing law does not provide for this taxability. I just shown it as an underlined. In order to provide symmetrical treatment and to discourage the practice of deferring the tax payment. Leave the deferring the tax payment. The symmetrical treatment. That means what they say is that whatever treatment 45(2) has got, same treatment has to be provided. That's what you are saying. If that be the case, that can be achieved only when you postpone the capital gains tax when the investment is sold, because that is when you actually get the realizable profit or profit to the second person. That is the underlying logic under 45(2). The symmetry will be reached only when the capital asset is subsequently sold. But however, the lawmakers would have thought, when you convert a capital asset stock in trade is something you are supposed to sell immediately. But investment is something which you are going to hold for a longer period of time. Therefore, if I am going to say at the time of sale of capital asset, the second point, I think you can't see the symmetry treatment alone. Discourage the practice of deferring the tax payment. That's what the board will come back and say, boss, you don't read the memorandum up to only one point. Read the next point also. I said symmetrical treatment and also discourage the practice of deferring the tax payment. The deferring of the tax payment may not arise in the reverse situation, because since you are taking it as a stock in trade, as a businessman, you would never like to hold a stock in trade for a longer period of time. You would like to liquidate at the earliest point of time. Therefore, the question of deferring the tax does not arise. But when you do the reverse, that is more tantamount to deferring of tax. So therefore, I think to that extent we have to take. But however, still the real estate people can still say that you should give a symmetric treatment and all. That's for you to on request. Now, let us look at the other points. They are making it very clear. The date of holding should be taken only from the date of conversion. You can't take the date of holding of the stock in trade. So those things they have made it very clear. That is open-ended in the case of 45. There is no such problem at all. Now, section 49 also very clearly provides that you have to compute the capital gains based on the stamp duty value. Take the stamp duty value as a cost. Everything was provided correctly. But now, so whenever you have a section, these are the provisions which are amended only from assessment year 1920. So let's have a quick comparison between the two sections. Now 45(2) is applicable for conversion of capital as stock in trade. The fair market value on the date of conversion will be deemed to be the full value of consideration, but you don't have any separate rules for determination of fair market values. Therefore, you have to go by the value at which will fetch in the open market. Both capital gains and business income will be taxable only in the year of sale of stock in trade, and the date of sale of stock in trade is relevant for exemption under 54 EC or 54F, because it's very important, because those sections allow 6 months from the date of transfer. But here, date of transfer is the date of conversion. Taxability arises only in the year of sale of stock in trade. I think we must really compliment the board, because they came out with a circular. The circular specifically says that you will get the benefit by investing from the date of sale of stock in trade and not the date of conversion. Interestingly, their first circular was reversed, and they withdraw the circular and gave a new circular, which is definitely a welcome measure from the board. Now introduced from assessment at 85-86 to overcome the decision of Supreme Court in by K. Kuka. But whereas, so 28(6)A will apply for the reverse conversion of stock in trade to capital asset. FME, the date of conversion will be determined as per 11UB, which is stamp valuation. And PGB will be taxable on the year of conversion, and capital gains will be taxable only when you sell the capital asset. Therefore, to that extent, you can find there is a difference in the treatment. Immediately on conversion, you will suffer income under the head profits and gains from business operation. The difference between your cost and the stamp value will be considered as your business income. So again, the decision which was overcome here was the Bright Star investment decision of the Bombay Accords, where since you don't have a similar provision, a liberal stand was taken. Now, is this section really bad? That's a question. Maybe yes, maybe no. But many times we find most of us have faced the 50C problem as well as 56(2)(10) problem, where you always find the stamp valuation, actual consideration difference was huge. And both buyer and seller for the same transaction are taxed. Now, let us assume a situation where your stamp valuation is 100 and your cost is 150. Your stamp valuation is 100, the cost is 150. Now, why don't you take advantage? 2868 does not say it's only income. Income always includes negative income also. In a scenario where the stamp valuation is less than your actual cost, in those circumstances, you can explore the possibility of moving that to investment, because you get immediately, there is going to be a business loss is going to be available for you. So there is one dimension of positive looking at the same section. Very importantly, you should also appreciate here, there is no safe harbor provided here. Assuming a situation where, so you convert it and the stamp valuation is more, but under 50C or under 43CA, you have a safe harbor of 10% is allowed. But there is no safe harbor is available for 2860. So you can ask the question, then can I then apply for 2860, 43CA and then take the safe harbor? We ourselves have taken a stand that the provisions of 45.2, 45.3, 45.4 are self-contained code. Therefore, you cannot apply 50C to 45.2 or 45.3 or 45.4 because you have a specific provision. 50C a general provision. The cardinal rule for interpretation, specific section will always prevail over general provision. Now, 45.2 is a charging section, self-contained code. Same thing is for 28.6a. 28.6a is a self-contained code. Therefore, it is not possible for you to invoke 43CA. Now, the second point what you must understand, 43CA clearly uses the word, there must be a transfer. In order to apply the provisions of 43CA, the requirement of the section is there must be a transfer. You can't say in 28.6A you are transferring. Internally in your balance sheet, you are moving the item from a stock in trade to investment. No transfer is made. There is no transfer is made to another person. Therefore, in that context also, applying the provisions of 43CA becomes a difficulty. That means safe harbor provisions on a couple of reasons, very difficult by using 43.6A. But do you have a 28.6A, does it have a safe harbor? The answer is no. So that is something which you have to understand. But however, there is always, suppose assuming a situation where you have a brought forward capital loss, then you don't need a business income, right? Because brought forward capital loss can be set off only with capital gains. So in such a kind of situation, why don't you use 28.6A? Because you need only capital gains, right? So therefore, move it there. The difference between the stamp valuation, the actual sale consideration, that will be taxed only as a capital gains. Thereby, you can use the brought forward capital loss. Therefore, it is not that every provision we should always look into as if it is negative. Each and every provision, you look into what you can make the best use of it. See, always people come back and say the market is going up, no fundamentals. End of the day, don't grip. Market goes up, respect it. You also go with the wind. Never always blame the screen. The market knows much better than what you and me know. We may be reading P ratio, all the stuff. But always respect the market, respect the screen and go with it. If you start questioning, it is only a question of fear of missing out. So instead, don't complain. That's it. Good. Market moves up, you make a problem. What's the problem? Whether market moves on account of fundamental, whether marks on technical. So again, there is one information which is coming where if Korea is moved into developed market category, India could roughly get $26 billion under MSCI index. You just imagine $26 billion if it comes to India. Who cares about what is your PE multiple? We don't even know what is it. $26 billion, I can't even write how many zeros are there for it. So therefore, I think this is what you written. That's why it's them. The lawmakers have enacted 28.6A. Let us accept the 28.6A and find out what you can do with 28.6A rather than complain about it. Because at the end of the day, you are not the finance minister, I'm not the finance minister to change it. And accept, either pay tax or try to save tax. Organizer's choice. Huh? Hopefully, we are not forcing them to sit. Kadala putli. So, any real estate discussion, I think I just wanted this issue because real estate issue with me around, possibly there could be some expectation that something will be on capital gains. I don't want to let it on, but definitely the first issues I took up primarily because wherever we get a topic, we always talk only about capital gains. In fact, I thought I should today break that this thing, talk on something different. It can be house parting and business income, but it should have an impact on real estate. I found these two are some recent amendments where the issues are very, very serious, and some cases where we also found that the department raised a very logical point. I won't say the department is wrong. Based on what is available in the law, their order is definitely correct only. But that's where I thought we should sensitize this issue. That also comes in. But this is something where we will have part of an issue which is going to be futuristic in nature, in past of its current issue. So we all know about 50C. So what I'm going to do is the interplay between a 50C with 54, 54C, 54F, that is already come with a lot of sections. That with 49.4, no issue has come so far. It is going to be the issue of the future. So that I will be my final slide. Now, we all know 50C talks about if your stamp valuation exceeds the actual consideration, the stamp valuation shall be considered as a deemed full value of consideration for computing capital gains. But for the purposes of exemption under section 54 or 54EC or 54F, should I have to take the actual consideration or should I have to take the deemed consideration? Should the capital gains as computed using 50C should be used, or 50C is only for computation? When I come to exemption, I will not use 50C consideration. I will only use capital gains calculated based on actual consideration. Or to put the issue on a very simplistic manner, should 50C deemed consideration, should it be inbuilt into exemption sections also? Is the very interesting issue, and I will also try to extend it to, as I told you, with 49.4 also. So just to set the tone, 50C provides for substitution of stamp valuation as a deemed full value of consideration in certain circumstances. Now 56.2.10 provides for taxing the difference between stamp valuation and actual consideration as income from other sources. If you combine the first and second point, you can easily observe both buyer and seller are taxed for the same transaction. And how we are going to use this for our discussion in the last part is what I think something for you to think about while leaving this hall. Now, section 54 ECF provides for exemption for reinvestment in another residential house or bonds. And what is the issue now? There are some conflicting decisions are there whether to apply the 50C consideration or actual consideration for exemption purposes. So this is where the next few slides I'm going to talk about. So the first of it is the decision by the Bombay High Court. We'll start with something against us, and then we'll go to something favorable to us. Because when we leave, I think we'll go with what is favorable to us. So I don't want the reverse. So this is a very interesting case, Jagdish Dabalia. But what was interesting in this judgment was the judges virtually agreed with the SSC and then took a decision against him. அதுக்கு பேசாம நீ வந்து நீ முதல்ல தப்புடான்னு சொல்லிருக்கலாம். நீ சொல்றதெல்லாம் கரெக்டு, ஆனா சாரி. ஸோ நீ அது சொல்லிருக்க வேணான்றப்போ இருக்கும். But anyway, I think let's go into what they try to say. There was a sale of plot of land for a consideration of 25 lakhs. The entire 25 lakhs was invested in 54 EC bonds. Entire 25 lakhs. So SSC declared a long-term capital gains of 21.19 lakhs. Obviously, the difference of 4.81 lakhs should be the indexed cost of acquisition. The case was taken up for a scrutiny where the capital gains was assessed at 49.47 lakhs, obviously because the guideline value was much higher than the actual consideration. The SSC did not disclose the stamp valuation. He went by the actual consideration. The assessing officer said since the stamp valuation is more, the capital gains was changed to 24.47, which is 49 point as a difference as a capital gains. SSC made a beautiful contention. Since the entire sale consideration was invested, my entire capital gains must be exempt from tax because the provisions of 50C will apply only for computation. You cannot apply section 50C for 54EC. So let's see in detailed manner what was the SSC's contention. Now, so before we go to that, just for the benefit of refreshing ourselves, this is actually how 54EC appears in the law. So where the capital gains arises from the transfer of a long-term capital asset, now of course it was land or building, earlier any capital asset, now from assessment in 1920, so it has been now changed to only land or building. So within a period of 6 months after the date of transfer, invested the whole or any part of capital gains in the long-term specified asset, that the cost of the long-term specified asset is not less than the capital gains, the whole of such capital gains shall not be charged. Let's not go into the second part of it. We'll stay with the first part. Now, if the cost of the long-term specified asset not less than the capital gains arising from the transfer of original asset, the whole of such capital gains shall not be charged under 45. The only question is how to calculate that. After superimposing 50C or without 50C. That is the issue. So for which we should go to 50C as to how it is worded. Now, take only the last 3 lines which is shown in bold. The value so adopted or assessed shall, for the purposes of section 48, be deemed to be the full value of consideration received accruing. I'm very, very surprised, shocked with the way in which they've recently introduced 50AA also. Now, you have to learn a lesson from this. Now, you have introduced a section like this. This has been subject to litigation. And you have lost many cases. In this budget of Finance Act, you have introduced a new section 50AA. Initially for market linked debentures. Before the bill was passed as an act with nobody in the parliament, it was passed. And there suddenly, as the media was talking about debt funds, it is not debt funds at all. They never said debt funds. They only said specified mutual funds where it has been defined as not more than 35% is invested in equity shares of domestic companies. That means please don't think it's a debt fund. If 35% or less is in equity shares, those capital gains will be considered as a short-term capital gains. Only thing is that now the wordings are identical here. They are also there for the purpose of section 48. In 50 also, Supreme Court itself has taken a stand. Capital gains on sale of depreciable asset is a short-term capital gains only for the purpose of computation, not for 54EC, not for 112, not for 74. Here also 50C, many courts have taken a stand that for the purpose of section 48, this you cannot impose it for the purposes of other section other than 48. If I had been the finance minister, I would have simply said in 50AA, notwithstanding anything contained anywhere in the act. Because I would have learned the lesson. I will not do another copy paste and 50C I make it as 50AA and modify. That is a mistake done. Again, we get an opportunity at the expense of the SSC, provided he is willing. So here the last line is, for the purpose of section 48 be deemed to be the full value of consideration. So therefore the context is what I've set in now. Now what is the SSC's contention here? Effect of deeming provision will be limited to the purpose of the same has been enacted. So it only talks about 48, therefore stick on to only 48, don't go beyond that. The relevant provisions would require a harmonious construction. So what is the harmonious construction we are talking about? We'll come to it a little bit later. Now, I have 25 lakhs of actual consideration, right? Stamp valuation is 50 lakhs. Now, where will I go and invest the remaining 25? Suppose you want me to invest the entire amount. From where I will invest? I have only 25 lakhs. My actual consideration in my hands is only 25 lakhs. The deemed consideration is 50. The remaining 25 is something which I don't have. If I have to invest for the purpose of claiming exemption and I don't have any other money, that means you are asking me to perform something which is impossible to perform. Consistently, always the courts have held, you cannot ask the SCT to do something which is not possible to do. So therefore, as I said, I got 25 lakhs of consideration, I put the entire 25. Just because the 25 is taken as 50 by 50C, can I put 50? That means you are asking me to do impossibility. And since the section only talks about 48, for the purpose of 54EC, capital gains should be taken only as capital gains based on actual consideration alone. Therefore, whatever be your 50C amount, as I said, no problem. You take 50C even as 500 lakhs, no problem at all. There is no tax. So this is the contention of the SSC. But whereas the revenue's contention was pretty simple. So you have to strictly interpret the law. The interpretation advanced by the SSC would effectively render the provisions of 50C of the Act redundant. I think that's a fairly good point, because whatever be the 50C value, once I invested my entire consideration, 50C will virtually have no effect. So that means when a law is enacted by the Parliament, you should always give life to the section. You cannot kill the section. So therefore, virtually this results in only killing of it. The SSC can claim exemption only in relation to investment made in the specified bond, not beyond. Because if you take that example, I would have invested 25 lakhs. If my stamp valuation is 100 lakhs, my exemption for 25 lakhs will be more than 25 lakhs also, if you want to make it a zero. That means without sections like 35(2)(ab), 54EC would have acted like a weighted exemption, which according to the department was never the intention of the law. Then go to what the Bombay Court has got to say. So this is the first point. They said deeming fiction of 50C must be given its full effect, and the court should not allow to boggle the mind while giving full effect to such fiction. So don't try to go into these things, just apply 50C. But the contradiction is what I was mentioning earlier. We are not opposing the proposition canvassed by the counsel of the SSC that deeming fiction must be applied in the situation for which is created. I agree with you. I am fully with you. But don't expect a favorable judgment from me. Yella correct. Ana. So what is that anal? However, giving full effect to the fiction contains safety of the act for the purpose of computation of capital gains under 48, for which 50C is specifically enacted. The automatic fallout thereof would be that computation of assesses capital gains, and consequently the computation of exemption under 54EC shall have to be worked out on the basis of substituted deemed sales consideration of transfer of capital asset in terms of section 50C. I agree with you, but you have to apply 50C to 54EC also. I think the last point is where I think the court got a conviction. Any other interpretation, particularly one canvass with learned counsel, would render the provisions of 50C redundant. I think the reason which went in favor of the department is 50C will become redundant if I go by actual capital gains mechanism, which is fairly right. There is no doubt about it. But however, assessees we also know he agreed, but still he didn't get the decision in favor. Now that was the Bombay Court judgment, and then we'll go to a slightly different situation in the case of Karnataka High Court in Gauli Mahadevappa. Very interesting. This time, Karnataka dimension we should enjoy it. Assisi sold the property for 20 lakhs and he has invested 24 lakhs. Now, obviously, the question comes, where is that 4 lakhs, additional 4 lakhs? That 4 lakhs came in this particular case out of agricultural income. That means his investment was 24 lakhs, comprising of 20 lakhs sale consideration, 4 lakhs, take it as some other savings. The AO assessed the capital gains by adopting the stamp valuation of 36 lakhs. After considering the investment of 20 lakhs for exemption to 54, capital gains was added. We all know that 54F is a proportionate exemption. The officer or either actually. He said in the denominator, he will take 50C consideration. Denominator. Amount invested by net consideration into capital gain. It's a method of calculation. Yeah, 54F. It's not like 54. It's a proportionate exemption. Cost of the new house numerator, denominator net consideration into capital gains. Now, denominator is that I will take 50C value, which is 36 lakhs. Numerator is that I will take only 20. Now, why 20? He said 20 is what you have in your hand, right? 20 is alone your sale proceeds. If I take 24, that means 4 is not from the sale of this asset. So that means I will take 36, 60 not received in the denominator. Numerator or bongatano. Numerator kaila ola paisa in sale pan actual sales 20 da. Numerator only 20 divided by 36 into capital gains. See, lot of times this Gauli Mahadeva, there's no one-liner we also give in our book. That's a problem. Here, the Karnataka did not went through whether 50C should be applied for 54F and all. Nothing have been considered. Not been you read the order any number of times, you will not find that. What it said was the numerator should be taken as 24. 36 discussion பத்தி அவன் கவலையப்படல ஆக்சுவலா அதை பத்தி பேசவே இல்லை. Assessee should be allowed to invest not only from the sale consideration, he can also invest out of his personal savings or loan also. It is not necessary that the investment should come only from the sale process. That means in this particular case, if the assessee had invested 36 lakhs, department should have given full exemption. 20 from the sale process, 16 personal, deemed consideration 36, no problem. That's not a problem. They never went to whether 50C and 54F, that part of it never discussed at all. Only thing that numerator need not have to be only from the sale process. It can be from your savings or loan or anything. I will once again repeat, Karnataka Code never discussed about 50C cannot be superimposed on 54F, was never there in the judgment. Because lot of times we find one line in the book, as if Karnataka had said 50C can be applied in 54F also. No. Bombay Court, yes, not Karnataka High Court. So of course the more interesting judgments are so before we go to the last the judgment here, the net consideration is defined in 54F. It's defined in 54F. The net consideration laid into a transfer of capital asset means the full value of consideration received or accruing as a result of transfer of the capital asset as reduced by any expenditure wholly and exclusively for such transfer. So here the net consideration is full value of consideration minus expenses. The only issue here is that whether this full value of consideration, should it be deemed consideration as per 50C or not? That is the only question. Karnataka Court did not discuss. Bombay Court judgment with the reference to 54EC only, not with the reference to 54F. So therefore, 54F, we will see the real judgment on 54F. I'll skip the judgment because we already talked about that. So here, it's a very interesting judgment. It's a beautiful judgment. I think definitely in this particular section, if you want to have a wonderful understanding, I would recommend you to read this judgment. Beautiful arguments, fantastic case law to get a full understanding of this discussion. Now here the assessee sold the property for 2460 He has reinvested the entire amount in new residential house. The AO assessed the capital gains by adopting the stamp valuations 9630. After considering investment of 2460, 54F was added. So what in this particular case assessing officer was doing, numerator 2460, denominator 50C value of 9603 into capital gains. But what assessee's contention was, that is only for computation of capital gains. 96.03 is only for computation. For the purposes of exemption, numerator is 2460, denominator should also be only 2460. Why? Read 54F. 54F says net considerations mean full value of consideration minus expenses. What is full value of consideration? Only actual consideration, because 50C is not overriding the entire section. 50C only talks about 48. So that means for 54F, numerator and denominator, I will take it as only as 2460. But just for a moment, take in this particular case, capital gains as 50 lakhs. I don't know the exact number, just hypothetically. That means what will happen for an investment for 24 lakh 60,000, what will be my 54F? 2460 divided by 2460 into 50. That means in a proportionate exemption section, for a 24 lakh 60,000 of investment, you will get 50 lakhs of exemption. Might look absurdity the highest order. Chuma number dispassionate number CA எல்லாம் விட்டுட்டு ஒரு mathematician பார்த்தா வச்சுக்கோ. The section says I am going to give you proportionate. Proportionate will get a weighted exemption. I think to that extent the section, if applied, throws illogic. Adala doubt illa. But however, logic and income tax they don't go together. So adu nama paakudadu. So therefore in this particular case, this was the decision of the court also. It accepted. I just don't want, since we are already exceeding the time. So we already discussed about the point, but it was beautifully argued. So I'll not get into the details of it. Now I'll just come to my version of it. But before that, where do we stand now? Gauli Mahadevappa, I put a question mark there, whether it is against. In my view, the answer is no, because they never discussed. Surely Bombay Court is against, but that is not with reference to 54F, that with reference to 54EC. There are a lot of decisions in our favor. More importantly, sitting in Chennai, we want a judgment from Chennai Tribunal, which is already there. That is Bhaskar Babu Usha. So that is something which in our favor, because at the end of the day, rest of the tribunal judgments we don't need. What we need is only our jurisdictional judgment, which is in our favor now. So that, of course, you can take. But so to that extent, we may not have a challenge, but just doing one step further here, one step further. Give me 5 minutes time. Thanks for your patience. இப்படி சொல்லிட்டோன்னா டக்குன்னு ஒரு 5 நிமிஷம் நீங்கள் சந்தோஷமா அடிங்கிறது தான், ஒரு 5 நிமிஷம். பட் எனி ஐம் வெரி, அதாவது என்னன்னா, even next speech I doubt whether I will try 23.5 and all, because the 23.5 and the 28.6 எல்லாம் போகிறப்போ அங்கே இந்த கேபிட்டல் கெயின்ஸ் வந்ததுக்கப்புறம் சடன்லி ஐ ஃபைன் the ஆடியன்ஸோட இது பயங்கர டிஃப்ரெண்ட்டாக இருக்குது. இந்த 23.5 இதே எப்படா இந்த 23.5 முடிப்பான் அடுத்து போடா அப்படின்ற மாதிரி இருந்தது. 28.6 ஏதோ சொல்கிறாரு, திடீர்னு இங்கே வந்ததுக்கப்புறம் பார்த்தா சடனாக பார்த்தா டீ பிரேக்கு எதுவுமே வேணால் நைட் ஃபுல்லாக எடுங்கன்னு சொல்கிற மாதிரி உட்காந்துருக்கீங்க ஆக்சுவலாக. ஸோ அதனால் பட் எனி நானே என்னோட கம்ஃபர்ட் ஜோன் விட்டு வெளில வந்தாட கஷ்டம் போல இருக்கு ஆக்சுவலாக. பட் எனி திஸ் இஸ் a slightly different dimension. We'll try to do something for the future, because you always talk about we should be futuristic. Now we have seen what is the department view in Gauli Mahadevappa. They want denominator to be 50C, numerator should be only on the basis of actuals. But please understand, when that particular judgment came, there was no 56.210, there is no 49.4. When this 56.27 has become 56.210, for the benefit of some of you, 56.27 came into effect from 1st October 2009, and when the section was introduced, for immovable property, inadequate consideration was not covered at all. Inadequate consideration not covered at all. It was there only for no consideration because of 50C. Mr. Pranab Mukherjee brought that provision in 2009, and immediately when it was told that results in double taxation, The very next budget, he withdrew the same. But unfortunately, when the finance minister from our state, when he became the finance minister, he said, we will introduce it. The section was brought back where the section was made applicable to inadequate consideration also. The effect of it, what you must understand, for the same transaction, both buyer and seller are getting taxed for the same transaction. Effectively, take this example. Safe harbor and all, don't consider it. I just try to manage without safe harbor. If it is there, also ignore it. Stamp valuation 200, actual consideration 100. For the seller, though he receives 100, he has to pay capital gains on 200. That means 100 lakhs of amount he has not received, he should pay. For the same transaction, buyer should also pay under income from other sources 200 minus 100, 100. For which, when this was introduced, our finance minister from this part of the state made a beautiful argument. What is the cost of the buyer without this section? 100. What I have done is, I am asking you to pay tax on the base of 200 minus 100, 100 now, and that 100, I am going to allow you as a cost under 49.4. Therefore, he said, I have not done anything. Whatever amount you pay as income from other sources, that you are going to get as a cost of acquisition. Only I am preponing your tax. I am not done anything. This is what he said. I don't think we should spend the time on it. We can have a separate debate on that. So 200 minus 100, 100 excess consideration to be taxed in the hands of seller. 200 minus 100, 100 will be IOS, and 49.4 says deemed cost to the buyer is 200. For seller, deemed consideration is 200 lakhs. Hypothetically, if you are also convinced that 50C should be taken in the denominator. How many of you are convinced 50C should be there in the denominator? How many of you? Just, right, 50C should be there. Okay, we'll take. I don't agree with you, but still we'll take it. Now, if you take 50C in the denominator, that means if you're going to take 200 as your denominator, what should be the numerator? For this purpose, I will straight away take this situation 3. Now you purchase a new residential house for 150 lakhs. The stamp valuation of it is 180 lakhs. Other two situations I have skipped on account of want of time. Now, assume in this particular case, you can superimpose 50C in the denominator. What should be the numerator? So now let's go back to the equation. Stamp valuation 200 lakhs. Indexed cost of acquisition 80, long-term capital gains 120. Now what is the department saying? I'll take for the numerator only actual cost. Denominator, I'll take on the basis of 50C into capital gains. What I am advocating here, if you can take 50C in the denominator, then your numerator should also be. See, what is 50C 200? Is a deemed consideration. If your deemed consideration can be taken in the denominator, and your numerator should also be deemed cost only. You cannot have a double standards. Once I can create a fiction and take the fiction in the denominator. In the numerator, what should be the amount? I paid 150 lakhs as consideration for buying this house. Stamp valuation is 180. 180 minus 150. Is 30 lakhs going to be taken as income from other sources? Yes? Unless it is from a relative. And once I take that 30 lakhs tax as income from other sources, 49.4 says 180 lakhs is going to be taken as my deemed cost. Once you are subject to 56.2, then the cost of acquisition will be the amount considered for the purpose of IOS. What is the amount considered for IOS? 180. So if you can take in the denominator 100 and 200, which is a deemed consideration, the denominator, if it can be on deemed, numerator should be also only on the base of deemed value. You cannot have 150 by 200. Just to convince you, I'll take you to the 49.4 extract on this particular point. Now this is 49.4. Now we have to see what is there in 49.4 to appreciate this particular point. 49.4. Now this is 49.4, where the capital gains are arrested from the transfer of property, the value of which has been subject to income tax under 56(2), 7(a) or 10. The cost of acquisition of such property shall be deemed to be the value which has been taken into account for clause 6 or clause 7 or clause 10. Now 49.4 says, once you are subject to other sources, then the cost will be the amount you considered. So what is the cost now? Now what is the department saying? Once 50C is applied, 50C is converse. We already saw about 56(2), 6A, 28(6A) versus 45(2). Same thing here. One is for the buyer, one is for the seller. For the seller, department says your denominator should be deemed consideration. That means for my investment also, for the buyer also, the deemed cost should be taken. Identical wordings, 50C, 49.4. So those who are convinced with denominator being on the basis of 50C value, I think you should also take 49.4 value as your numerator. Of course, I do not consider, so far I am convinced, notwithstanding the amount of capital gains and all you should not see. It might look absurd, but however, that's a fiction. It is up to the lawmakers to change the law. When the law says it is only for the purpose of 48, I don't think we should go beyond that. But if you are convinced on that particular point, yes, I want to go by logic, not by what is there in the law. But that can also apply for the numerator. So with this, I think I've taken a lot of your time. Sorry for extending beyond that. I once again thank Society of Auditors and also MMA for giving me this great opportunity. And I think hats off to all of you from 9 o'clock to West End. Thank you. Thanks a lot.
Thank you, sir. That was a perfect finish to Agile, the full day program on accounting, GST, IT, and legal, exclusive to real estate industry. Thank you, sir. A lot of insights. The uncommon sections, as you rightly said, you gave the unexpected. Thank you so very much. May we now request CAS Krishnan, chartered accountant and expert in capital gains himself, Krishnan, sir, to present a memento to CATG Suresh. So the hall is full until evening, the last session, and also we have 540 people watching it online. So it's a great success, and thank you all. Without the audience, the conference is definitely not successful. Thank you so very much.
Yes, sir.
Thank you, sir. May we now request CA Anusha Srinivasan, the first women president of the 90-year-old the Society of Auditors, to give her concluding remarks and share her gratitude for the successful Agile, first of its kind, a sector-specific conference from SOA, and first ever with MMA. Over to you, ma'am.
I'm truly short for words, and I think TGS has been kind enough to propose a vote of thanks on my behalf. I would like to just add one thing. In fact, the link between MMA and SOA has been CATG Suresh. It's only because of them this whole event went through. I just have a couple of pleasantries to be presented. May I request Captain Vijay Kumar to hand over a memento to CA Rupa Ramachandran, a health bouquet. She's been the biggest support from the SOA side in managing the whole event, right from designing, inception, implementation and execution and everything. A big shout out to CA Rupa Ramachandran. Our another committee member, CA Renuka Murli too, had been part of this. In fact, she designed the acronym Agile and she was instrumental in bringing the chief case for this morning, but she's already left for the day. As I always love to address this person as the voice of SOA, CA Subhashini Ganapati, being the MC of the day. As always, she took us through the event so seamlessly and a wonderful summing up after each session, keeping the audience energetic at all the times. May I request Captain Vijay Kumar to hand over a memento, a token of our appreciation and love from Society of Auditors and the management, MMA, to CA Subhashini Ganapati. I would like to join. From the bottom of my heart, I just request one thing, a standing ovation for Captain Vijay Kumar and his entire team. Please.
It's not for us, it's for the teamwork. I think we should learn collaboration is the order of the day. And thanks to Anusha and the team, they're brilliant actually. We really enjoyed working with them. Thank you so much.
Have a beautiful evening, all of you. Thank you. We'll join for tea. I think we'll have the national anthem now. Please turn.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मागे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे